Clients often ask me, how should I purchase my next car? Should I do a novated lease? Should I do a car loan? Or should we use cash? So this decision tree is going to step you through the options. The first question we ask is actually, do you want an electric vehicle? Because if you do, there are fringe benefits tax exemptions for private use of these electric cars. And if you're on a high income, they can be really tax effective. If you don't want to buy an electric vehicle or the car purchase above the luxury car tax, then it may be better to use a loan or cash. Another consideration is whether you're a business owner. If you're a business owner and you use the vehicle for a lot of business use rather than personal use, then it can be quite effective to purchase the vehicle through the name of the business, because you can do a lot of claims for GST, interest, depreciation, and running costs. Whether you're a business owner or an employee, the idea of opportunity cost is really important. So let's consider most car loans, they might be around about 8 or 9% interest rate per year. So you need to think, with the cash that I have available, can I outperform that rate of interest? If not, you should preferably use your own business or personal cash. However, in some cases you can, particularly on the business side. So let's say with the cash, you were able to generate a higher return on equity with that cash through some of your business endeavors. So as an example, let's say you utilized Google ads for your marketing spend. And with that return on equity, you were able to get a 15% net return on equity. Then using that for marketing would actually be a better option than paying cash for the car. However, it's a little bit more difficult with personal use because a car loan interest rate at 8 or 9% is quite high and hard to outperform net of taxes. And then for instance, money in your mortgage offset is almost always going to be a lower interest rate than the car loan interest rate. And so therefore it's often better to use cash when buying in your personal name. But here's the really important caveat. You should only purchase a new car when you've got all of your other financial planning organized and sorted already. So things like having a cash flow buffer of at least 3 months, being able to save regularly each month, purchasing your first home and being on top of your mortgage repayments, paying off all your other bad debts first, such as credit cards and other personal loans. Really, buying a nice new car is a luxury once you've got the basics already sorted. Because remember, cars depreciate often 15% as soon as you drive it out of the dealership. For more information, click the link in our bio. It will take you to this blog post with a lot more information on how to best purchase your next vehicle.